Hello everyone. Welcome to the third chapter of GST Tutorial Series on Goods and Services Tax Network, that is, GSTN, presented to you by Spine Software Systems. You are with me, Akshansh Chaudhary. In this chapter, I will cover the return and payment process under GST. For simplification, I will cover only three types of returns in this tutorial, that is, GSTR1, GSTR2, and GSTR3. More on that later. Let us understand the return filing process. Consider a company called Haryana Life Sciences. Haryana Life Sciences, as shown in purple, manufactures sealed liquid bottles. It has GST identification number, an HSN code, as shown. And the state code for Haryana is 06. For simplification, let us keep the GST identification number as GSTIN1, and the HSN code as HSN1. Haryana Life Sciences supplies raw material to Punjab Pharma Limited, as shown in blue, which uses these liquid bottles to manufacture eye drops. Along with the raw material, Haryana Life Sciences also sends the invoice. Punjab Pharma has GSTIN2, and HSN2. It stores its inward supply in P2, and outward supply details in S2. Punjab Pharma then sends this finished product to the distributor, Punjab Medical Store, shown in yellow. Punjab Medical Store has GSTIN3, and HSN2, since the product is the same. It stores inward supply details in P3. As it must be clear from the naming convention, I have kept one of the supply of goods from Haryana to Punjab, that is, interstate supply, and the second one from Punjab to Punjab, that is, intrastate supply. Now, let us see what happens at the end of July 2017. Let us suppose that Haryana Life Sciences sends two invoices to Punjab Pharma, invoice number 11 and 12. Each invoice has a GSTIN, HSN, and the tax, that is IGST in this case, since it is an interstate supply. The total outward supply for Haryana is 66,000 rupees, and the IGST collected is 6,000 rupees. Similarly, Punjab Pharma sends two invoices, invoice number 21 and 22, to Punjab Medical Store. Since this is an intrastate supply, SGST and CGST is charged on the invoice. The total outward supply for Punjab Pharma is 88,000 rupees, and the SGST and CGST collected are 4,000 rupees each. Now, using these invoices, all the taxpayers have to file their return of outward supply. This is the first return, which is called GSTR1, or GST Return 1. Since Haryana Life Sciences had sent two invoices to Punjab Pharma, it should enter the details of those two invoices in the GSTR1. Let's take a case where Haryana forgets to enter the details of invoice number 12. Since it entered only one invoice, the submitted outward supply of Haryana becomes 11,000 rupees, instead of 66,000 rupees. And let us consider that Punjab Pharma correctly enters both the invoices in its GSTR1. So, the outward supply listed for Punjab Pharma stays 88,000 rupees. Now, all the three taxpayers will submit their GSTR1 to the GSTN portal, before the 10th of the next month. Since the outward supply of Haryana Life Sciences is actually the inward supply of Punjab Pharma, and similarly, the outward supply of Punjab Pharma is the inward supply of Punjab Medical Store, the GSTN system automatically gathers the inward supply of all the taxpayers on the 10th of August. This form is called GSTR2A, where A stands for auto-populated. GSTR2A is sent to the respective taxpayers on the 11th of August. Note, August is the next month to the month in which invoices were sent. Once the taxpayers receive GSTR2A, they compare it with their inward supply data. The comparison for Punjab Medical Store checks out, since its GSTR2A shows two invoices, and it matches with its inward supply of two invoices. But for Punjab Pharma, it has received GSTR2A with the data of one invoice, but its inward supply shows two invoices. That happened because Haryana Life Sciences had entered only one invoice in its GSTR1. Punjab Pharma would now correct GSTR2A. So, it would add the missing invoice from its inward supply data. Once the GSTR2A is updated, it becomes GSTR2, or the return of inward supply. All the taxpayers have to prepare their GSTR2 between 11th and 15th of August. GSTR2 is submitted on GST Common Portal before the 15th of August. Since Punjab Farmer had updated its inward supply data in GSTR2, on August 15th, the GST portal compares the GSTR2 and GSTR1. Using this data, the system prepares GSTR1A, or the auto-populated return of outward supply. GSTR1A is sent to the taxpayers on the 16th of next month, that is, on August 16th. The taxpayers compare GSTR1A with the details of their outward supplies between the 16th and 20th of August. On comparing, the details of Punjab Farmer remain the same, but Haryana Life Sciences finds out that it had missed one invoice. So, it enters invoice number 12. This prepares the updated GSTR1. The new GSTR1 is uploaded on the GST Common Portal before the 20th of August. Once uploaded, the old GSTR1 gets replaced with this file. Now, on August 20th, that is, the 20th of next month, GST Portal automatically prepares GSTR3. GSTR3 is the monthly return of inward and outward supplies, which includes the details of both GSTR1 and GSTR2. GSTR3 is sent to all the taxpayers on the 20th of August. They are expected to check all the details and submit on the GST Common Portal on the 20th itself. This completes the return filing process. Now, let us see how the payment takes place during the return filing process. Let us first look at ledgers. There are three types of ledgers that are maintained on the GST Common Portal. These ledgers are cash ledger, credit ledger, and liability ledger. Simply put, all the transactions of a taxpayer are recorded in the cash ledger. Any credit received by the taxpayer is shown in the ITC ledger or credit ledger, and all the liabilities or pendency are recorded in the liability ledger. These ledgers are maintained by GSTN, and are non-editable for the taxpayer. Each ledger has subdivided in three heads, that are SGST, CGST and IGST. In case of a union territory, the SGST would change to UTGST. Now, let's get back to our previous case. All these three ledgers would be maintained on the GST portal of each of our three taxpayers. So, the ledgers would look something like this. Please note that the SGST for a state may be referred by adding the first letter of that state. So, SGST for Haryana can be called as HSGST, and that of Punjab can be called as PSGST. Now, let us see how the ledgers would be maintained during the entire return filing process, as discussed earlier in this tutorial. A quick recap. Purple, or Haryana Life Sciences had uploaded only one invoice on the GST portal. So, the IGST, it is supposed to pay is 1,000 rupees. And Punjab Farmer had correctly entered both the invoices. So, it is supposed to pay 4,000 rupees as PSGST and 4,000 as CGST on the GST portal. This is shown here. Now, when the taxpayers upload their GSTR1 on the portal, on the 10th of August, the liability ledger of Haryana Life Sciences gets updated with 1,000 rupees in the IGST head, and that of Punjab Farmer gets updated with 4,000 in the PSGST head and 4,000 in the CGST head. Next, we had seen that Punjab Farmer had updated GSTR2A by adding one missing invoice. Punjab Medical Store had made no change. Now, since the taxpayers are entering the details of inward supply, that means that they are entering the tax that they have already paid. So, they should get the credit for that. As shown, let us say that these taxpayers get a provisional ITC. I will explain the provisional part in a moment. So, when they submit GSTR2 on the GST portal, on the 15th of August, the IGST head of ITC ledger of Punjab Farmer gets updated with 6,000 rupees, and the PSGST and CGST heads of the ITC ledger of Punjab Medical Store each get updated with 4,000 rupees, as shown. Now, we had seen that Haryana Life Sciences had updated its GSTR1 between the 16th and 20th of next month. It follows from that the IGST payable in the liability ledger of Haryana Life Sciences should get updated from 1,000 rupees to 6,000 rupees. And the liability ledger of Punjab Farmer should remain the same. So, when the taxpayers submit their GSTR1 on the GST portal, their liability ledgers get updated. Haryana Life Sciences has to pay 6,000 rupees instead of 1,000 in the IGST head. Next comes the part of making payments. On the 20th of August, once the GSTR3 is submitted, the taxpayers have to pay the updated tax, as shown in their liability ledger. So, Haryana Life Sciences has to pay IGST of 6,000, and Punjab Pharma has to pay PSGST and CGST of 4,000 each. Now, once Haryana Life Sciences pays off its liability, the IGST head of its cash ledger gets credited with 6,000 rupees, and its liability becomes zero. At the same time, the ITC, which was given on provisional basis to Punjab Pharma, now becomes eligible. This is shown in green. Punjab Pharma can now use this ITC for payment of its liabilities. Let's see the case of Punjab Pharma. It is expected to pay PSGST and CGST of 4,000 each. As it pays off its liability, Punjab Medical Store will get its eligible ITC. Punjab Pharma has 6,000 in its credit ledger of IGST. As per the rules of GST, the credit of IGST has to be first used for the payment of IGST, then CGST and finally SGST. Since Punjab Pharma does not have any liability of IGST, it can use this 6,000 rupees to pay off its liability of 4,000 rupees of CGST. This is shown here. Once that happens, the CGST head of the cash ledger of Punjab Pharma gets credited with 4,000 rupees. The credit ledger of Punjab Pharma gets debited by 4,000 rupees, leaving 2,000 balance. And the liability ledger of CGST head reduces to zero. Correspondingly, the CGST head of the credit ledger of Punjab Medical Store updates from provisional ITC to eligible. Punjab Medical Store can now use this ITC for payment of its liabilities. Now, Punjab Pharma has an SGST liability of 4,000 rupees, and it has a credit available for 2,000 rupees. Let's do this in two parts. First, let's use the credit of 2,000 for clearing the liability of 2,000. Then, pay the remaining 2,000 rupees using cash, or card, or any other payment method, to clear the liability. At the end of this process, the liability of Punjab Pharma should become zero, and Punjab Medical Store should get all of its eligible ITC. Now, as we first use the credit for the payment of PSGST, the credit ledger of Punjab Pharma reduces to zero. The PSGST head of the cash ledger gets credited with 2,000 rupees, and the liability ledger reduces to 2,000 rupees. Please note that the PSGST head of the credit ledger of Punjab Medical Store gets divided in two parts, provisional and eligible. It now has 2,000 of provisional, and 2,000 rupees of eligible ITC in its SGST head. Finally, when Punjab Pharma pays off its liability of 2,000 rupees, the cash ledger gets credited with another 2,000 rupees, making a total of 4,000 rupees, and the liability reduces to zero. And Punjab Medical Store gets all its eligible ITC, as shown. This is how returns and payments would work on the GST portal. That's all for this video. Thank you for watching. To know more about GSTN, please watch our other videos, in which we have talked about the basics of GST, and the registration process in the GST system. This video is brought to you by Spine Software Systems. If you have any queries, feel free to email us at gst@espine.in. Accept Digital. Transform India. An educational initiative by Spine Software Systems Private Limited.